So, gold is on the move. Big time. And yeah, we've seen this movie before, right? But something about this time, it just feels different. The numbers we're seeing are frankly off the charts, and it's making us ask some really big questions. Not just about our money, but about the whole system. So, let's get into it. Just look at that number for a second. $5,000 an ounce. In early 2026, gold didn't just inch past its old record, it completely obliterated it. And this came right after a 55% jump the year before. So, we're not talking about some gradual, gentle climb here. This is a massive, seismic shift, and it's sending a signal, loud and clear. And that signal really forces us to ask the big question, the one at the heart of all this. Is gold itself suddenly becoming that much more valuable? Or is something else happening? Is it actually everything else? Our dollars, our investments, all the financial promises we rely on? Is that what's losing value right in front of us?
Okay, so to even begin to answer that, you have to start with the usual suspect, right? The money printing engine. We've all heard about inflation, but the sheer scale of what we've seen lately, well, it's just on a completely different level.
It's, economics 101. When governments and central banks just create more money out of thin air, the money you have in your pocket goes down in value. Simple as that. Every new dollar or euro or whatever just dilutes the value of all the ones that are already out there. It buys you less. And this isn't some abstract theory. You can see it happening in real time. Just look at what happened after the pandemic. The U.S. Federal Reserve just opened the floodgates, unleashing this tidal wave of new money. Its balance sheet, look at this, it just exploded. From $4.5 trillion to over $7 trillion in just a few months. That is an insane amount of new cash flooding the entire system. And that really gets to the fundamental difference between the money we use every day and gold. Fiat currencies, like the dollar, have an unlimited supply. They can literally be created with a keystroke. Their value is based entirely on you trusting a government's promise. Gold? It's the complete opposite. You can't just print more of it. Its supply is finite. It's limited by actual physics. And its value isn't backed by a promise. It's backed by, just about 5,000 years of human history. So yeah, inflation is a huge piece of this puzzle, no doubt about it. But is it the whole story? Not even close. There are much deeper, more structural things happening just below the surface. And that, my friends, is where this gets really interesting.
This brings us to what we're calling the hidden drivers. Because what we're really seeing are signs of profound stress, not just in the economy, but in the global financial system itself. And these forces, they go way beyond simple inflation.
And you can think of these as three massive cracks starting to appear in the foundation. Number one, central banks themselves are buying gold like never before. Number two, we're drowning in a level of global debt that is mathematically unpayable. And number three, rising geopolitical fear is causing a massive flight to safety. Okay, let's talk about those central banks. In 2025 alone, they snapped up 863 tons of gold. Now, let's be super clear here. This isn't your average investor or some hedge fund trying to make a quick buck. These are the most powerful financial institutions on the planet, making a very deliberate, very strategic move. This is way more than just a hedge. It's a huge statement. So why are they doing it? What's the play here? Well, it's all about gaining independence from a single currency, specifically the US dollar. For countries like China, Russia, and India, physically holding gold in their vaults means they're not beholden to anyone. It's a real asset that no single nation can control or sanction or devalue on a whim. It is a geopolitical power move, plain and simple. All right, now for that second crack in the foundation, debt. By the end of 2025, total global debt, so that's all government, corporate, and household debt combined, hit $348 trillion. It's a number so huge it's almost impossible to wrap your head around. It sounds fake, but believe me, its consequences are very, very real. And this mountain of debt leads to this really predictable and frankly dangerous cycle. It goes like this. First, governments pile on impossible amounts of debt. Then, to even make the interest payments, they have to print more money. That constant printing starts to erode everyone's trust in the currency. And as that trust disappears, well, smart money starts flowing into the one asset they know can't be printed into oblivion, gold. And that brings us right to our third big driver, good old-fashioned fear. Gold is the ultimate safe haven asset. What does that mean?
It means when the world feels chaotic and unstable, investors don't want complicated financial promises. They want something real, something tangible, something that's been proven to hold its value through crisis after crisis. And let's face it, in a world with escalating conflicts and growing rivalries, that flight to safety can turn into a stampede really fast. When people start losing confidence in stocks, bonds, even in their own national currencies, gold isn't just one of the options on the table. It becomes the ultimate destination.
So, when you start to put all these pieces together, the rampant money printing, the central banks quietly buying, the historic debt levels, and all this global fear, you begin to see what this rise in gold really represents. It's not just a number on a chart going up. It's a barometer for trust in the entire system.
And this right here, this is the absolute key to understanding why gold is so unique. It has zero counterparty risk. Think about it. A stock is a claim on a company, and that company could go bankrupt. A bond is basically a loan to a government, and that government could default. Even the money in your bank account is technically a liability of that bank. But gold, its value doesn't depend on anyone else's promise to pay you back. It just is.
And that's exactly why it has endured for so long. I mean, from the earliest civilizations in Mesopotamia, through the entire Roman Empire, through the rise and fall of countless other empires, all the way to the balance sheets of today's central banks, gold has been the one constant. It has outlasted every single paper currency ever invented, every single one.
There's this quote that just nails it perfectly. Currencies depend on the promises of governments. Gold depends on nothing but physics and history. That's it. That's the whole thing in a nutshell. One is a system of belief, the other is just reality.
So after looking at all of this, we kind of have to go back and reframe what we thought we were seeing at the beginning. The real story here, the fundamental narrative, it's not actually about a shiny metal getting more expensive. That's just the symptom, not the cause.
No, the real story is that confidence is falling. Confidence in our modern financial system, a system that's built on a mountain of record-breaking debt, fueled by endless money printing, and held together by fragile geopolitical promises. That confidence is cracking. And when that happens, people do what they have always done for the last 5,000 years. They return to the one asset that has never, ever broken their trust: